The Frank Ammon Show. The Frank Ammon Show. Your number one source for entrepreneurs to learn, earn, and create wealth.
A mindset. Comfort is the enemy of success. It is the killer of dreams. You are enough. It's got to include the result you want. The best parts of your life is right on the other side of hard times. When they ask you what do you do for a living, you're going to say, I do whatever it takes. You got to keep going. You got to keep fighting. I'm going to step in my moment. We started from the very beginning saying, hey, let's do this. Only it's going to serve other people well.
And now, here's your host, Frank Ammons.
What's going on, guys? It's a Friday night, and we got a great show for you tonight. I am so glad that you're with us. I haven't been able to do a show all week, and I had to get one in before the end of the week, and we got a great one here tonight. I hope you guys are tuning in because all of you guys give us all the feedback about real estate investing and how you want to learn more. Well, here is your opportunity. We have a great guest on with us tonight who's going to lay down the info, tell you, show you what it's all about. She's got a great business going on. I've been watching her real close, and seeing that she's doing some things. And I think you guys are going to really enjoy what we got going on tonight. All right. So before we do, I want to remind you guys, if you are trying to get in the game, you got to get in the game to even try to win the game. You can always check us out at the Squad Up Wholesalers Group. And I'm going to play a quick clip for you about that. And we're going to get into the guests tonight. And so let me play that for you real quick. And we're going to introduce our guests so we can have a huge talk, an awesome talk. I believe it's going to be awesome to hear some of the things about how she is doing in real estate investing. Let me play this clip for you real quick and we'll get started. What's going on, guys? This is Frank, and I want to tell you about an exciting opportunity that you do not want to miss, especially if you've ever thought about getting into real estate investing. The time is now. Real estate is at its all-time high, and you can get in today, start flipping houses, and believe it or not, with no money and no credit. Yeah, that's true. I know that myth has been out there, but it's absolutely true. And believe it or not, it's more possible than ever today to get started and actually start making money in real estate investing. We have created with my partners a free Facebook group for you to join so you can network with other wholesalers as well as investors and get help even from us of how to get started into real estate investing. It's called Squad Up Wholesalers. That's right, Squad Up Wholesalers. You can go check it out, join it, and I promise you, one of the things you'll learn as far as getting into real estate investing is the best way to get deals done quicker is to squad up, network, team up with other wholesalers, other investors, other partners like ourselves. And we'll show you exactly how to do that. Matter of fact, if you're looking to do your first deal, join the group because we'll help you get your first deal right away. I mean, you can get your first deal this week, even today if you wanted to. It's not unrealistic. There's so many opportunities out there. You can absolutely crush it in the real estate game by flipping houses, and we'll show you exactly how to do it. Join the free Facebook group today. There's no fee. There's no upsell. It's called Squad Up Wholesalers, and let's start getting you more money in your pocket in real estate investing. You got to build your wealth sometime, and today, or right now, is a great time to start. So join this group, Squad Up Wholesalers. We'll see you in the group, and hopefully we'll be able to squad up and make a lot of money together in real estate investing. We'll see you there. All right, guys. So I hope you guys can join that group and get involved. For those of you who have been knocking on our door daily, weekly about how to get started, well, that's a great opportunity for you to get started. So no more delay. We're going to bring our great guest on tonight, and she is none other than Lyssa Marie. What's up, Lyssa?
Hey.
How you doing?
I'm doing well. Thanks for having me.
Now, thank you for coming on the show. Now, I don't know if you're still here, but I saw that you were in the Tampa area. Where are you at right now?
Well, I'm back in Houston, but we were in Tampa for just a few days to kind of fill out the market, see if that's somewhere we want to expand to. Yeah.
And I saw you had a little bit of maybe some critiques about the market over here. So what was your thoughts? Just so we can get
So
started
the
with that.
profit margins are not as the spread's not as great as it is in Houston. We're used to seeing the 70 to 150 range for profit. Tampa was more of a volume play.
Gotcha.
And yeah, so we're considering Tampa still, but we're probably gonna move up to Dallas or Atlanta.
Yeah. Okay. Well, let's before we get into all this, let's talk about you and how you got started. Let's introduce you to everybody watching and how you got started in real estate investing. You're Lyssa Marie. You're in Houston, Texas. We've been watching you a little bit here and there, and it looks like you're doing some great things. This is something you do full time, right?
Full time as of October.
As of October. So you just got into this full time last October?
Yeah, I was doing everything kind of part time. Well, I mean, I was putting full time hours in, but I still had a normal 9 to 5 job. Then finally in October, I decided to cut the umbilical cord from my job and just go in full swing with real estate. So
what was the other job? Just so we're curious, what kind of job?
Sure, I worked for the National Security Agency in Washington, in Maryland area in cybersecurity.
Okay.
And a great job, great agency, but I mean, you spend a lot of time there, know.
Yeah.
So
And you're making other people money and giving your time and services. So let's get into what made you decide, and everybody probably can guess, but what made you decide to take the leap and even start in real estate when you were starting it full part time, and then you eventually went full time.
Okay, so I started real estate when I was 19, and I had just graduated from my bachelor's degree, and I was working in social work. And I still love the social work aspect of things, and that's why I do have a couple of nonprofits and other things like that going on. But social work, you don't get paid much, So I was trying to figure out what ways can I continue doing what I have passion for, but supplement income. And so I was just, when I said supplementing, I was like, an extra couple $1,000s a month would be great.
Right.
So I purchased my first property, which is a duplex, and fixed it up little by little, each paycheck, just kind of fixing it up. I didn't have a concept. I was 19, didn't know about hard money. So I just was like cash,
Right.
And so that's what I did. And just, it became addicting. You're like, oh, well, I'm getting paid, $3,000 a month, but I'm getting $2,000 from this duplex. I'm not doing anything. So let me try another one. And then until about 2016, I was solely buy and hold. So, the rentals. And then something clicked and I said, a couple things clicked. One, I was like, let me start doing flips. And the second thing was, let me get into multifamilies, buy apartment complexes and things. So those that's my two strategies, multifamilies and flipping singles.
Okay. So you started when you were 19 and you started getting into some real estate holds, which for those of you who are watching, that's basically holding on to a property and making it a rental so she can have some cash flow coming in. So where were you finding the resources to do that? Was it just money that you put aside, or how would you do it?
It's money that I had aside. So I had like a nice little savings amount. Well, not really nice, but it was like 14,000 at the time. And I depleted my savings account to buy this is back when the market was crashing.
Right.
So I was able to get cheap property.
Okay.
And so I depleted savings accounts, and then I would put aside my part of my check to just little by little. I mean, we were struggling to get this property together. A matter of fact, I was actually hiring people that were coming out of prison that had been trained in prison. So I would sign their probation papers and they would come fix it for like half the cost. And that's kind of how I started getting into it, honestly. Yeah.
Okay. So you were saving some money there on the labor and all that good stuff. That's awesome. So do you mind unpacking like your first deal? How much money did you have to put in to actually score it and then rehab it?
Yeah. So it was almost to the point where it probably should have been torn down, but it was $14,000. They were saying land value only, but I was like, we could kind of save this. So we did save it. And it needed about $45,000 worth of work. And just slow rolled it. every month I put probably about $2,000 to $4,000 into it, and it was a duplex, so I did one side first, and then then I was able
Okay.
to kind of snowball it with the next one. So
How long
yeah.
did it take you to get both sides done and ready?
Both one side was done in 6 months. The other side I took like 4 or so months.
Okay.
Yep,
And
and
is that a property you still have today?
still have it now. It's
Wow.
valued at almost 300,000.
Woo! So
Yeah,
and so you got that property. What year was that you got that property and you got
in
it rented out?
2008.
2008. Whoa, that's
Mhm.
way back there.
Yeah,
Okay, so
house
that
crash.
definitely was in the middle of the crash there.
Yes.
Okay, so you grabbed that property. So total what were you in total after you got everything done?
We were at around 60,000.
60,000 plus, and that was for the purchase and
Purchase
the
and
rehab.
rehab. Yep.
Okay. And then what did you rent it out for then?
The rents are, well, I don't remember what it was back then, but now it's about $1,400 collectively.
Okay, for both sides together?
Yep.
Gotcha. Okay, so and I'm sure that's gone up for
Yeah.
you, right?
Yep.
So what is without, you don't have to give all the details, but what's the return been like for you on that one property?
I mean, we kind of made up for the cash out within like 3 years, really.
Right.
We did everything new, like under plumbing, electrical, so we never have maintenance issues. And we had the same tenants in there on both sides.
Really? Okay.
Yes.
So you ended up doing a refi and a cash out, right? Is that what you said?
So I did not actually cash out on those until last year,
Oh,
2020.
okay.
Mhm.
Got you. So you got super max value because of the increase. You
Yep.
pulled some money out, and that's a great thing. So, as some people may or may not know, what method is that? I know you know.
Oh, look at my shirt.
It's the Burr method.
The
Okay,
Burr.
buy, rehab, rent,
And repeat.
refi, and repeat. There it is.
Yes.
There.
And there's Gucci because he says Burr.
Burr. Okay, yeah. So that makes total sense. There you go. Here you
Yes.
go. So she got the shirts and everything. Cool. By the way, guys, if you want to know more information about Lyssa, her website is, and I have it here. I'm just going to make sure I say it right. apwealthconnect.com. apwealthconnect.com. And by the way, I checked it out before, and it's got a lot of great resources on there, as well as she offers some classes and master classes. Is that right? Tell us about that.
Yep. So we do offer classes, and it's 500. I try and do it dirt cheap. $500 for the class, and that includes 2 nights of lodging. So it's really you're just paying for the lodging.
Okay.
So yeah, and it includes two meals, and we go through everything on real estate investing. Go from like just basics of buying rentals, doing the flipping process. We go through everything: how to acquire the property, how to run your numbers. We do exercises on those things. We go to how do you look at the property and say, like, what needs to be done, because you don't want to underdo it for that area. And then we also go and we have our contractor come talk about how, change orders, how you do your draw schedule. We go through, even go through more advanced real estate investing, such as buying notes.
Okay.
And so we talk about financing the properties. I mean, it's A to Z. Like, you leave there and you should have a strategy in place on how to go forward.
Right.
And then we also talk about our investment group, which I'm sure we'll talk about that later. But how to get into real estate investing, flipping, with little money into.
Awesome.
Yep.
All right, let's go back to your story of like leading up to here. So you did the first property, which sounds like, there's been many people I've interviewed where the first property was a botch, but yours was a bank. All right. So maybe the botch to the bank. So you got a bank going on there. So you've done many more rentals, it sounds like, after that. How many do you have now? And then
we're at 44 doors.
44 doors. Wow. Yep. Awesome.
Yeah.
So those are all ones you purchased for the intent of renting it, and that's what you ended up doing, right?
Yes.
The Burr method.
Yes, exactly.
Okay. Awesome.
Yep.
So you got 44 doors. Mm-hmm. How long did it take you?
Combo of single family and multifamilies.
Okay. Mm-hmm. How long did it take you to get the 44 doors? I mean,
so 2008 to 2020.
Okay.
Yeah. And I went slow. And so I tell people that I messed up. I didn't know about hard money, all those things. So for 2008 to 2015, I used cash.
Right.
So
Up until 2015 is when you find out about hard money, huh?
hard money.
Tell,
And I was like,
yeah.
oh, yep, exactly. I'm
Tell
like,
the
oh,
folks a
shoot.
little bit about what that means, hard money.
So with hard, and so this is my investment strategies change obviously over the years, but so now that I've matured in this area, that I always look for value add properties. So I'll look for
What does
something.
that mean? Because we have a
Yeah,
lot of new people. I want
value
to make
add
sure.
property are properties that either are distressed, like they look messed up, or they need renovation, or the value add could simply be that the rents need to be raised. There's some kind of value that you can add to the property in order to increase the property value.
Gotcha.
And so I go for a property. I only deal with value adds because the point is you don't want to really. Well, for me, my investment strategy is I don't want to buy a property at its height. I want
Right.
to come in and get the property, under where I can add some kind of I can gut it. I can gut it and add value to it. And then the good thing about it is you don't have as much money out of pocket coming out, just because of how lenders work. Most lenders will do like the 70% of ARV. And so when you kind of like finesse your numbers a little bit, you can come into a property with very little cash or no cash.
Right.
So yeah, in this market, hard to go with no cash and something like a multifamily, but you can do it with little cash.
Got you. So when you're using hard money, basically, what can you kind of explain what that is to people? Because I don't know if everybody
Oh,
understands that.
sure. Okay, so traditionally you use hard money for fix and flips. You don't want to use it for anything that's a long term. Well, most lenders won't do it long term, and you wouldn't want to because they're only interest payments. That nothing is applied to principal, and they're just short term loans, 6 months, maybe 12 months, or for new construction a little bit longer. And basically there's the standard formula is 70% of ARV, or well, that's pretty much the standard formula. And so a property that has an the after repair value. Once you buy a property, you fix it up, and then you determine that, oh, this property is worth $500,000, then the lender will give you 70% of that.
Right.
I don't have my calculator because I like using real numbers. So 500,000, 70% of that is 350. So the lender say, we'll give you 350 for the property. The property might only be going for 230. And so you would have $120,000 left over for renovations. So hopefully your renovations aren't over that $120,000 mark, because if they aren't, then you have no cash. You don't have to put any
Right.
cash into the deal. But if in that situation, if your renovations are 150 and you only have 120 left, you have to come up with that difference, that $30,000 difference. And then so you just pay your loan to the lender just monthly like you would any other loan, and it's high interest. Between 8 to 12% is standard, and again, nothing goes to principal. And the goal is you're fixing these properties up and you're getting out. So either you're fixing it up and selling it, which is like, probably like a 3 to 4 month process of well, it depends how long your renovations cost,
Right.
but but then for renting side, it's quick. You fix it up 4 weeks and you're refinancing it into a permanent loan, and you move on to the next one. That's the BRRRR process.
Yeah. So why would someone use hard money versus regular mortgages or?
Oh yeah. So a lot of hard lenders don't necessarily care about credit. It's first off, it's asset based. So some lenders will check your credit. And to be honest, in my opinion, I think the lenders that do check your credit give you more favorable terms. Like
Right.
you've got longer terms, less interest rate, less points on your loan. But if you do have messed up credit, or challenged credit is a proper term, then you could go to a lender who does not check credit and it's completely asset based, but you will have higher interest rates and such. And but it's a way to get in. And there's no docs. There's no docs, so you don't have to prove your income. You're not going through debt to income loan ratio or anything like that. So it's a quick loan. Like most lenders are about 2 weeks. Ours is just a day or two. So that's the advantage of using hard money.
Yeah. And And before we break it down, I want to break that down. But before we do, probably your lender is really quick with you because you probably
Yeah,
give them a lot of
right.
favoritism, right?
Yeah.
So a lot
Mhm.
of deals go that way. And
Yeah.
that's what happens, folks, when you get into this deal, you go full time, you get more benefits, you get more of a turnaround in your favor. So let's
Absolutely.
break that down for people. The ARV obviously is after repair value. So they're going
Mhm.
to give you up to 70% of a
Mhm.
loan of the ARV. Now, who determines the ARV?
Okay, so you should be the investors should be pretty versed in understanding how to create how to uh get to a ARV because their lender's going to ask you, and if you go and say, "Oh, I think it's $600,000," and it's really like 400, they're like, "You don't know what you're doing. We might not want to,
Right,
do this deal with you." So you do need to kind of have some type of knowledge on that, and that's really just, I mean, you can do it just using Zillow. Just go to
right,
the solds, and you have to just understand that how appraisals work. They don't go over major highways, don't go over major streets, they don't cross water, they don't cross bridges, just that pocket. And so once you understand how the appraisals work, you can kind of figure out what the sold prices are, and you can use the price per square foot. So even if it's like you use the average, right? Use the average. One
mhm,
house might be $200 per square foot. One might be 230, one 240, and you just use the average of all of them because that's what appraisal would do. Appraiser would do, and just multiply that by how many square feet there are, and that gives you your ARV.
okay.
Um,
Now,
and
how many
so
houses let me ask a question real quick about that because that's great knowledge. Matter of fact, I got a little thing for you. I should hit the so that was a knowledge bomb you just dropped there. For those of you who didn't catch it, we'll try to unpack it here. So I knew you were going to do that. I should have been trigger ready. So here we go. Okay, so how many houses do you usually try to do your comparisons with?
So I do as much as I can in that 6 month time frame. You can't go out more than a year because appraisers don't do
Okay,
that.
okay, let's 6 months of sold,
Hmm.
not crossing water, major highway, major streets,
Or
okay,
bridges. Hmm.
or bridges.
Yep.
Okay. Guys, this is good stuff. I'm even writing it down because I haven't heard some of this stuff. I've heard some of it, but not all of it. All right. So bridges, water, or major highway or roads.
Yep.
And within 6 months has to be sold, not for sale. Just so you guys
Correct.
know that.
Correct.
Sold.
Yep.
For sale is a different thing. People could be
Asking
delusional.
anything. Yes, and they often
Uh,
are.
so okay. So how many houses are you usually pulling to get that square footage that you're talking about?
So most neighborhoods aren't going to have like crazy amount. You're probably going to, once you do that, and usually confines you to like a 10 block uh area, you're going to get probably maybe like 20 or so, and then you're just going to start picking away at the ones that are like grossly different than yours, like if they just aren't renovated at all, or if they're if and then you're looking at, does it have a pool or not, you're looking at something. So then you try and dwindle it down to like properties.
Okay.
um so yeah, so then so we
Maybe like 4 to 5?
yeah, 5 is just, yeah, it's good. 4 to 5 is good.
Okay.
Um, yep. And then so another thing to note is different lenders have different requirements. So some, like the 2 week lenders, they're going to usually ask for a full appraisal, which is out of pocket expenses. But if you're new to investing, you might feel more comfortable with an appraisal because you're going to get more definitive numbers on your ARV.
Mhm.
But once you're kind of in motion and you're doing a lot of deals, you kind of have a feel for it. Your lender has a feel for it, and then they'll do a broker a broker appraisal, which is like a desktop appraisal essentially, where they're doing what I'm telling you, what I'm saying. Look at your solds, and that's it. And
They do
so
it themselves.
do it themselves, yeah.
Right.
Hmm.
Okay. So they're probably likely doing something very similar to this,
Yeah.
pulling the sold 6 months or more recent, not
Yep.
crossing bridges, water, major road,
Right.
or major highways. Um, Probably drilling it down to 4 to 5,
Yep.
looking at the ones that are very close in comparison. And
Yep.
then what you said something about the square footage. You take the average.
Yeah, take the average that you get
Mhm.
um on the sold. So you'll have to on this, if you have the 5 sold, you'll need to figure out what the price per square footage is, then get your average, and then multiply that average by how many square feet your property has, and that gives you
Gotcha.
your, yeah.
Awesome. Guys, that was great information right there. This is how you're going to be able to figure out what this potential property is worth. And that's where it all starts for anybody. Even if you're wholesaling, you need to know that. You've got to know this stuff, guys. So this is great information. Now let's jump back into the hard money lending. So so you create the ARV, and then they're going to give you up to 70% of that, which is what the loan is. And you mentioned hopefully the repair cost hopefully you're getting the house for a discount that's low enough that the repair costs and purchasing is covered in that 70%. Is that what you're trying to do?
Correct. However, just in this market, it's really not overly realistic to think that that it's going to be a common thing to be able to cover all of that into your into that 70%. The average that I don't know what Tampa is, but right now the average in Houston is that folks are putting between 50 to 100,000 in on a property. Reason for the huge disparity is because in Houston, we're a unique market where our ARV is obviously an average what the broker will go for, but a lot of times and just in the Texas area, our houses are selling way above ARV, what the market is dictating, because we've got a lot of California folks moving here. And so they have cash to pay the difference. Whereas in more stabilized markets, you're having your traditional buyer that's putting down 3.5% into the house. And so they cannot afford to pay the difference between what appraiser determines the price to be versus what you might sell it as. And that's so on the resale side, when you sell it to your to the end buyer, once you finish renovating the property, it has to meet appraisal for the average buyer, right?
Right.
And so if it does not, they have to pay the difference. Now, if you're coming from California and you just sold a house and you've got, $200,000, $300,000 in cash, and the difference is $100,000 or $50,000 of what you're asking versus what the appraiser said the house is worth, they don't care. They're going to spend it.
Right.
So you've got to know your market and who you're targeting and what's the climate of your clientele.
Yeah. Yeah. So we got all the New Yorkers coming here, and you got all the Californians.
Yep.
I wonder why, because we got some good stuff going on in both states. Right? So, all right, cool. So these are good stuff. So hard money lending is something designed for short-term situations where you can get the house, repair the house, and then you're going to get out of it by one or two ways, by either refinancing and getting a traditional mortgage or selling the house after you put it back on the market and flip it, right?
Yeah. And then one thing I should mention is people always ask, why should I use hard money? Why should I just go to the bank? And the reason why is a lot of times when you are working with wholesalers or off-market properties, they want you to close quick. The quicker you can close, it's also a bargaining chip. Like if you're like, hey, I can close in 30 days or 60 days, they're like, we're not going to deal with that. A lot of times there's double closings in wholesales, and they just want it to be quick. So if you're going to go to a bank, they're going to want to do a full appraisal inspection, this and that. And a lot of these properties aren't going to, even measure up for that. So a lot of times you've got to use cash or hard money.
Yeah. And that's, you probably could give a great list of different hard money. There's a lot of ton of hard money lenders out there. So you just got to do some networking. And I tell this to people all the time. Networking is one of the major keys to this industry. What would you say about that?
I think networking is the most important thing, because it can change your trajectory for sure. So with our lender, we were at one point putting in, $100,000 into those are, they're charging 2 to 3 points. The interest rates are higher. The 70% ARV thing was we were asked to be in our 70% ARV, but once you talk to them, say, hey, this is the plan, we're going to be doing this, do that, you can use that for bargaining. And as long as they see you demonstrating the things that you are saying, you network and you start bargaining with it. So like, hey, I only want to pay 1 point, or I can go over here to this other lender, because they want to make money too. They're here for money. So you can use that as a bargaining, but you have to network in order to start bargaining. So.
Right. Now, for those who are newer, Lyssa, is there hard money lenders out there who will maybe jump in with you even if you're newer?
Yeah, I actually think that all of the hard money lenders that I know will. It's just the terms are going to be different, right?
Right.
Yeah,
And you're willing to pay a little more because it's really not meant for long-term use. It's meant to
right.
get in the deal and
Yep,
everybody make a piece and move on,
yep.
whether it's refining it or selling it. Now,
It's,
let's talk about your story again. You went from holding to, it sounds like you started doing more fixes and flips. Talk
yes.
about why you made that transition.
Okay, so so we started doing flipping, kind of just like here's one Z, two Z's, and it wasn't my main focus. My main focus was even in the switch happened when the market started going, the housing market for um the sellers market, you know, started going crazy. So as we were like half and half at one point. And so when we saw that, like, oh, there's a housing shortage, well, let's tee off, let's just kind of, get these couple multifamilies, and then let's just have them sit tight, and we're going to go full-fledged on the flipping while the market's hot. And so the strategy will change, and you should be versatile in your strategy, but we changed that in 2020,
Okay.
because that's when there's a shortage of houses. And so it makes sense. You're making 70 to $150,000 on every 3 months versus just making your 20,000 on a multifamily a month. So it makes more sense to focus on what's making the most money, and which the cash flow. The market dictates it, and you have to be able to you have to be able to flex to what
Right.
the market's showing.
So that's a good tip, guys. The market right now, there's a shortage of inventory. People are looking for homes. So flipping a house, making it sellable, so to speak, where it's retail, and
Yep.
that's what happens when you fix and flip,
Yep.
then you are able to get max dollar for it, which gives you more return.
Mhm.
You said 70 to 150 every 6 months. Is that what you said?
Yeah, but we're kind of every 3 months.
Okay. So you're every 3 months. Is that how many houses is that you're
That's
flipping?
one.
Woo, girl, come on. We
Yeah.
like, hold on. I got it.
Yeah.
Man. So that's
Yeah.
one. She said one, y'all.
Yeah,
Come
that's
on, man.
one.
No wonder you went full time on this in October, man. That's awesome. So
Yeah,
every 3 months, that's one deal. You're getting anywhere from 70 to 150. Wow.
right. And the reason why is because we do like the higher end flips. So when you do lower end flips, your entry point is less, but your return is less too. And so we focus on upper middle class to upper class. So our
Okay.
homes are selling anywhere from 6 to 800,000.
Gotcha.
And the reason why and there's less competition in that market too.
Right.
And so, and there's a lot more work to be done in those. And so you're taking on a lot more risk. So the reward is a lot higher.
Okay. Now I'm going to play a little promo when we get back, and I'm going to just tease this for you guys. Matter of fact, make sure you put your comments, any questions you have for Lyssa. She is giving us bomb after bomb of knowledge, dropping it here on the Frank Ammon Show, and I appreciate her doing that. This is what this show is all about: to teach, to help, to give people some runway so they can take off with their financial freedom. So before I do that, I'm going to play a promo. When we come back, we're going to have Lyssa give us some insider secrets of how she actually finds and negotiates deals. Hey guys, I want to tell you about Impactpreneurs. Impactpreneurs is something I'm excited to share with you guys about. And basically what Impactpreneurs is purpose-driven entrepreneurs who are dedicated to creating successful businesses, products, and services, producing results that offer a life-changing impact on people so they can uplift communities and even change the world to be more like our Creator intended it to be. Impactpreneurs, guys. If you're an entrepreneur who has a passion, has a purpose-driven, service, product, or business, and yes, you make great income, but you also make great impact or want to make great impact, I want you to consider joining our free Facebook group called Impactpreneurs. Impactpreneurs is something that's going to change the face of entrepreneurship for the better, so more people are making more impact with their businesses, products, and services. Love to see you there. Hope to see you there. don't forget to join Impactpreneurs. All right, we are back, guys, and we are excited because we have Lyssa Marie here, who's a real estate investor, a master real estate investor, and she has already dropped bombs. This podcast is so valuable already. Thank you for doing this, Lyssa. And before we went to the commercial, we wanted to tease everybody. Tell us maybe a couple secrets, if you can, if you don't mind, of how you're finding properties and how you even negotiate your properties.
Okay, so not a secret. I use wholesalers because I'm kind of lazy on that front. But I say every single time I love wholesalers, and people, I know wholesalers get a bad rep sometimes of like, oh, they're marking up the prices, but it's the same thing. I mean, it really ends up being around the same like commission as a regular real estate agent would be when you do the 6%. So it's not really, to me, I'm okay. Like, you guys did the work finding it. I don't want to do that. I'm okay. Everybody has to eat. So I use wholesalers.
Okay.
We are actually going to be transitioning, just because we have a high volume. We are going to be transitioning to hiring someone to do it in-house. But still, I will not be doing it hands-on. And there's really no trick in negotiating because it's really just project by project. There might be just some things about the house. We bought one today that we went and saw it, and it was just on the highway. It was just one house away from the highway, so you could hear the noise. And, they're going to try and sell you and say, oh, but it has a pool. I'm like, yeah, but it has a highway, So you kind of just got to, it's just normal negotiation that you've got to use. And of course, you want to use the lowest ARVs that you can find when you're negotiating. Like, okay, this house was only, 500,000. So it's a big risk for me. So I'm not gonna make that much money. And then you lower your price down that way.
Right. Now, when you do establish a ARV, like the true one that what's your formula? Is it 60, 70%? Where are you trying to be? Obviously, if you're using hard money lenders, 70%, but where are you trying to be when it comes to determining what your max price could be?
So we just like to see the minimum of $70,000 return. Like, worst case scenario, this is what we're going to get $70,000 return.
Wow.
And we won't touch a property unless we know we can get that.
So 70 return minimum is what you're looking for. And it sounds like you're doing better than that in most cases.
Yeah.
70 is kind of like, if you can't. So in other words, so let's just say, what would you say your average house is that you're buying? Is it 200, 300, 400? Where are you at?
It's between 3 and 4.
3 and 4. Okay.
So
let's say
bought today was 360.
360.
Actually, I won it by $1.
Really?
Mm-hmm.
So you were in a little bit of a bidding war and you won it by $1?
Yeah. So we did 361,001.
Wow. Okay.
Yeah.
Okay. So
I overheard, it was a new investor. I overheard them talking what they were going to do for their offer. And yeah.
Ooh. They put it out there too much. Okay.
Yeah.
Okay. We see the hustle now. We see it loading right here.
The world, the doggy dog world.
Yeah, that's right. Okay. So keep your deals tight when you're around.
Yep.
Okay. All right. So you put in, you bought it for 360. We'll just say for round numbers.
Yeah.
And so are you guys confident? Obviously you're confident of the minimum 70 on it, right? So
yep. So we're gonna put 100,000 into it.
Okay, so you'll be at 460.
Yep.
Right.
And we're gonna sell it for 695.
695. Ooh, I gotta pull out the calculator for that one. All right, let's see what we come up with. 695. How do you determine your fees? What, 10% or so?
Actually, our realtor fees, we only pay on the buyer side. Okay. That's another thing that we do. We pay a listing agent $1,000. They don't take commission.
Oh, so flat fee.
Mm-hmm.
Come on. And you probably use the same one. So they're probably getting hooked up, so they don't mind doing that. Again, that's why you guys can't dabble.
Yes.
Can't dabble. You have to do what Lyssa should have done and get in full time, right?
Yep.
All right. So just what would you say your fees are? What you estimate? 5%?
On the 3%.
3%.
For closing costs, 5% for closing costs and all that. Yeah.
Okay, so 5%. Okay, I'm gonna take that out. All right, so I'm just going to do some quick math here so everybody can understand. Here we go. 5%. It's about 34,750.
Yep.
All right. So 695, 34,750.
Mm-hmm. Mm-hmm.
That, ooh, my calculator's getting crazy here. Hold on real quick here. 34,750. We're at 662, 250.
Yeah, wait until you see that profit.
Now let's do what you're in it. 460.
Yep.
Woo! Come on. 200 and 250.
Yep.
Right.
Yep.
Now, this probably is a can you talk about the property a little bit? Like what's the floor
Sure.
plan and all that?
It's in a very well-established neighborhood. And it has a lot of flips going on. And that's the reason why we actually did go with it, because it has a lot of comps to go off of.
Okay.
And they're all high comps.
So what's the square footage?
2,700 square feet.
2,700. What is it? 4 or 5 bedroom?
Four bedroom. Yep.
4 bedroom.
4 bedroom. Yeah, it has a game room.
Nice.
And a pool.
Yeah. Right. So this is your California buyer type stuff, huh?
Yes, exactly.
Gotcha.
Yep.
All right. So guys, we have learned some major stuff already, and I hope we got a couple more minutes with her because I want to get a couple more things. But if you've been paying attention, which I hope you guys are, let's see, we got a comment here. What's going on? I have a credit score of 785, but only about 5,000 in savings. What is your advice? What should I do to get started? Whoever this is should have already been started. You better tell them, Lyssa.
Well, yeah. And so with $5,000, I mean, honestly, you got either find a deal yourself that has a high ARV and that you have little to put into. You just got to pay your closing costs. However, you do need to set aside money monthly to be able to pay your note. The second thing is wholesale. That's no money. Find the deal for someone else. Do a few deals. Get your bag up and then do it yourself. Or 3, partner up. So I have an investment group that well, the minimum is $10,000, but we partner people up. So if 7 people and then they flip a house, we take 20% of the profit and they split it amongst themselves. So you might want to find an investment group and partner.
Yes. All right. So ask your questions away. Hopefully that answers that. Didn't tell me who it was, so I couldn't mention their name. But if you're the one who put that comment, hopefully that answers it. If we can help in any way, let us know. All right. So going back to this. So we've already learned, folks. All right. They said thank you. So they're watching. We can't see it. This says Facebook user on our end, so we don't know who it is. But if you want to ask a question, please do so. Put it in the comments. Lyssa's here to answer those questions. We'll do our best to get it to her. All right. So we've learned already that you go after the mid-class to upper-class type homes. Yep. Because you know who's moving in and buying and who's got some cash and who's got some liquid stuff going on there. Yep. You also go off of real skewed down comps, which is awesome. I think it's been the best info on comps we've got since we've started doing these interviews. So that's been a major deal. You use hard money. Do you use hard money in pretty much all your deals?
Hard money or private money?
Okay. Okay. Come on now. Yeah. So tell us maybe a little bit about private money and what's the difference, and then how you got that going.
Okay, so private money is like networking.
Okay. That's why you said network is so important.
It's a little story time. It's kind of, we have time for a story. So I was trying to buy a 19-unit apartment building. And I kept calling the broker. He wouldn't answer, wouldn't respond to calls. So I did a reverse lookup, see who owned the LLC, blah, 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 all that kind of stuff. Anyways, it came back to a guy in New York. I called the guy up and I said, hey, I'm trying to buy your apartment building. And he said, okay, well, where do you want to offer it? I'm just like, well, kind of starting off my first multifamily. I want to put as little money as possible. And he said, well, you sound like a nice gal. He said, can you come up to New York? And at the time I was in DC. So he said, can you come to New York and meet me at this sushi restaurant in the corner, blah, blah, blah. And I said, kind of weird, but sure. I'm like, tell my family this is where I'm going to be at. If I don't show up, he marked me. So then anyways, I met him and he was like, I had help getting into real estate, multifamilies. So I'm going to pass pass it on. He's like, I'm going to take off $200,000. I'm going to give you $100,000 to put in escrow in case anything happens to the property.
Wow.
And
Come
I was
on.
like, this is so weird. Like, what's wrong with the property? And he's like, absolutely nothing. He's like, this is an amazing property. It cash flows. It's, you can add value to it, whatever. And it has been an amazing property. And so he's one of my private lenders. So whatever
Wow.
I need, doesn't matter if it's a real estate deal or a business situation, he's always there providing private money.
Wow. So not only did he hook you up with your first multifamily,
Mhm.
right?
Yep.
Gave you a discount on it,
Yep.
and even put some money aside in case something was to come up. He's
Mhm.
also became one of your private lenders.
Yep.
Now, if you don't mind, in general, how do you put together your private lender type deals? How does that work?
So it's really just a promissory note. It's like, and I don't know how typically it goes around, but for me, he just has me sign it. His lawyer draws up a promissory note, and he draws out my account every month. And I mean, it's really the same process as a hard money lender. He'll ask me to send comps over. I guess he probably verifies it, and
Mhm.
it's a go.
Right. So he puts the money up, and then his lawyers put together the paper,
Mhm.
and then you sign everything off, and then it just takes out just like a regular mortgage or even
Yeah,
private money. Okay, gotcha.
exactly. Yep. And
Now
we
is
sign it at closing. We sign the promissory note. Everything's at closing.
is he able to, in this case, close as fast as these hard money lenders?
Yes.
Okay.
Yep.
Now,
And then
now,
also, I should also say the lenders, the hard money lenders, the private lender, they can close quickly when the title's open.
right, and that means clean and
Yeah.
ready to go, right? Okay.
Yep.
So, so what would be the advantage of using him versus the private lenders?
Lower interest rates, okay, and way easier to bargain with. Like, this is 70 or 80% ARV. With the private lender, I can say, hey, like, I want the whole thing done, or 90%, whatever, and you can bargain and say, well, instead of just interest payments, how about I give you a chop at the end? You can kind of like make more
Right.
negotiations.
Are these still going to be structured in term of shorter deals?
Yeah, it will
Okay.
usually, yes.
Okay. So you're suggesting even putting together a creative way to incentivize them not only on
Mhm.
what he's making on the money, but also maybe on the back end once you do the flip. Is that what you're saying?
Yes.
Gotcha.
Yes.
Awesome. So everybody wins. That's what it's
Everybody
all
wins.
about, right?
Yep.
So
I use him for like larger multifamilies. If there's like a amount that at the end of if the ARV is not high enough or something, because multifamilies sometimes are wonky. So
right.
I'll use him for private for the multis.
Now, when you find a property and you do your own analysis, you do your
Mhm.
numbers, even a multi-family deal, I'm sure you're good at doing that with the rent rolls and all that good stuff in
Yep.
there. Do you go ahead and move forward and put a contract on right away, or do you wait to make sure you got the money secured by either private or hard money?
Um. So with the single family flips, I go. As soon
Yeah.
as I decide it's a good deal. I go, and I'll figure it out later. The worst that can happen is I lose my EMD, but I won't, because I'll just front that
EMD, tell
money.
everybody what that is.
Oh,
I know what
it's an earnest money
okay.
deposit.
Yes,
You
sir. Yeah.
put that down for pretty much to show that you're serious about a house, and it goes into escrow, and it's applied to the principal at the time of closing.
Right. Right. And if for some reason you don't fulfill or perform on it, the person that was listening that or trying to sell it to you would get that money.
Yep,
Right.
exactly.
Gotcha. So maybe on the multifamilies, you make sure first it's going to be a deal you can get financed.
Right.
Obviously, it's a bigger deal, right?
Yeah, and so with multifamilies, there's a lot more. The process is a little bit longer than just the single families. Like, hey, renovate, boom, and you go, and whatever. Multifamilies, I always do contingent on financing, because that kind of covers you with like the lending side, as well as like the appraisals, all that kind of things. Because you want to make sure that the rent roll is in fact the rent roll, because that's a thing that people will kind of fabricate the rent rolls. And I do like to go inside majority of the units to make sure that a lot of shady sellers will update like 3 or 4 units and be like, all of them are updated, and that's not the case.
Right. Right. So you try to walk the property and look in everyone you can.
Yeah.
That's good. That's good advice. Now, so here we are, ladies and gentlemen, Lisa Marie, who went from doing one house in
Mhm.
2008. What is that now? It's almost 13, 14.
Yeah.
Well, how many years is that? 14 years ago? I don't know, do the math. Long time ago, right? And so she's been doing houses ever since. Now she's into the, what triggered for you as far as making you realize you need to kind of target the middle class to higher class? What was that to happen?
Oh, I was looking at the profit margins. Like I'm like, this is the same time frame that you're, that I'm just an aggressive investor,
Right.
and I was just like, I didn't see the $10,000 to $20,000 profit as being, something that I wanted to wait around for 3-4 months on. And then also there's other things to weigh. The lower price point houses, you're going to get lower income folks, and their financing falls through. In my opinion, probably more than one for a middle class or upper middle class. So it was those kinds of things. I wanted just a little bit more stable investment and
Right.
exit strategy.
Now, does this allow you? Is there more to find in those areas as well? More
in
opportunities?
the middle class area.
Yeah.
I think there's probably more in lower end. But like I said before, the competition is higher in the lower
Right.
end and it's less in the middle area, just because the price point and the risk level. The risk, you have to have a high risk tolerance
Gotcha.
for middle class.
Got you. And now we won't get too deep into this, but do you guys hire your own people, or you have your own crews, or how do you do that?
So it started off with me hiring someone, but the person that I hired ended up being like my little best friend. And
Mm.
so we're kind of like merged on things at this point.
Okay, so someone you can count on all your stuff, and everybody kind of knows what each other wants to get done,
Yep.
and the whole
Yeah, and
goal.
I fully trust him. Like if I'm out of town and we need to buy a property, he can go. He knows exactly what I want, and so and he can figure it out and tell me like let's make an offer on it. And he's really good. Like Luis can figure out the ARVs himself now. He can figure out everything and be like, okay, this is what we're looking at to this is what you're looking at to cash out of pocket. Like he can figure everything out at this point. So
Awesome. So that was a contractor. Now it sounds more like a partner. So that's
yeah.
an awesome
And I
deal.
think that's important too, to have a good team that you can trust. And it's also about empowering your team, because it's a two-way street. It makes both ends happier.
So, guys, you can hear right here. This came from being a part-time thing just to supplement income to now this is a full-fledged real estate investor empire. This is your empire. We
Yep.
got an empire going here. So what is next for you? What are you looking to do this year and a few years ahead? What are you trying to accomplish? What is it? Are we
So
going to
right
see you on TV? I got a feeling we're going to see you on TV. Come on now.
So right now we are in the beginning stages of getting our rendering for a neighborhood that'll be about 400 houses, and we are doing crowdfunding for it. So
Okay.
we just funded or just filed the SEC filing, which is the federal securities, so that we can allow investors to come in to invest in the neighborhood, which will be a commercial space and residential homes, and the investment pieces solely for the commercial space there. And so that's our next big big deal.
So you're building a whole community. Wow.
Yep. And then this year we're building 5 luxury homes in the Heights in Houston. But yeah, we're trying to go big. So
Wow. Wow.
yep.
Are you gonna be able to like put your own signature on stuff, like literally? Like this is a home by Lisa
Lisa
Marie.
Marie, yeah.
Well,
I
you
mean,
should do that.
I should.
Yeah,
I'll
because
do it.
people will start to call, want a house that you do and all that. And
Yeah.
awesome.
Yeah.
Brand yourself, girl. Go for it. You got something good going here.
Yeah,
So this
I
is
should.
awesome. Hey, well,
Well,
listen, go ahead if you want to share
no,
anything else.
as I said, my company's actually named after my husband's military ship. He's in the Navy. So yes, I don't want to be too cocky, put my name on everything, but
Okay.
yeah,
Yeah, I understand. I understand. Well, listen, we're already at 55 minutes here. You have been gracious enough to share with us some deep, awesome knowledge about how to get in the game, how you got in the game, some secrets on how to comp, how to ARV. We didn't get into, there's a lot of stuff we didn't get into. So we've got to have you come back. We've got to
all
have you
right.
come back.
Look forward to
I
it.
hope we can have you come back and share some more stuff. Guys, if you're in the Texas area, if you're anywhere, I'm sure Lyssa will be helpful to you. You can even go to her website. That's apwealthconnect.com, AP Wealth Connect. I put it in the comments. go sign up for her class, be a part of what she's doing. She's got the knowledge and experience. She's not just talking it. She's not just saying it. She's out there doing it. You can just follow her Facebook page and see that. She's got like a reality show going on almost. So, hey, I appreciate you coming on and sharing all this knowledge with us tonight.
No problem.
Hey, well, we're going to, right after this, we're going to close this out. But if you can stay tight for me, Lyssa, I want to talk to you after we get done here. But we're going to close this out. Guys, thank you for watching and being a part of the Frank Ammons Show.
You've been listening to the Frank Ammons Show. Until next time, remember, Michael Jordan was the best player in the world, but didn't win a single championship until he got the right coach. Visit FrankAmmons.com and schedule a game-changing call with Frank himself and watch your business accelerate to the next level.